Welcome to this edition of the Midday Market Update for June 18th, 2020. My name's Kevin Hill, and sitting beside me, as always, is the dude, Michael Vincent.
Welcome, everybody. Good afternoon.
Yeah,
Hope everybody's having a great week so far.
I do, too. I hope it's been a great week for everyone out there in our audience.
Yeah.
This is our twice-weekly show that we bring to you on Tuesdays and Thursdays at 12 p.m. Eastern Time. And it's the midday, our freight market outlook, everything that's driving the freight market, from data and analytics to the latest and breaking news. And it's also interactive, too.
It is interactive, yes. So, so get your comments, questions in on FreightWaves LinkedIn and Facebook. We'll read through those and get them answered as best we can. We got some great guests on again today, don't we?
We do, yes. So our outside guest at the 30-minute mark at the bottom of the hour here, our first Skype guest is Bob Poulos, who's the CEO of V3 Transportation. And then at 12:40, Brad Rollo, the CEO of Go4.
Two interesting kind of diverse type of things there, because you've got V3 Transportation is expedited, right? And then you've got Go4, which is in final mile building materials.
Yeah, final mile construction and building materials, which is, I think, taking off since the coronavirus pandemic has kind of shifted things around. But as always, we'll start it off with Andrew Cox and then rotate into the freight markets with Zach Strickland, who's our Director of Freight Market Intelligence here at FreightWaves, and then our lead economist, Anthony Smith, before in the first part of the first 30 minutes of the show.
Right on.
But as always, FreightWaves.com, we'll go over the headlines with Andrew Cox, our research analyst here. And the first one was something that came out of committee on insurance limits for trucking companies. And what do we have on that, Andrew Cox?
Yeah, Kevin, John Gallagher out of D.C. wrote this one. The lawmakers that have been marking up the U.S. House of Representatives version of the Surface Transportation Reauthorization Bill have approved an amendment to more than double the required insurance coverage for truck owners, from $750,000 to $2 million. The amendment was introduced by Chuy Garcia out of Illinois, and it was passed by the House Transportation and Infrastructure Committee late yesterday. Proponents of the amendment argue that the current insurance liability doesn't adequately compensate victims of accidents involving large trucks, but opponents, who of course include small businesses and truck owners, contend that raising the limits could force small businesses and truckers out of the industry while raising the cost of shipping for consumers. The House version of the reauthorization of the FAST Act, called the Investing in a New Vision and Environment of Surface Transportation in America, or for short, Invest in America Act, is a 5-year, nearly $500 billion surface transportation bill that was unveiled earlier this month. The bill must be approved by the Democrat-controlled House in a vote scheduled for late June, before moving to negotiations with the Republican-controlled Senate.
Interesting story to me. What's your take on this, Kevin?
It's an amendment that came out of a committee. It has a long way to run. I think the Invest in America Act will pass through a lot of horse trading that will go on from here on out. The actual premise of doubling insurance to $2 million, or more than doubling, I guess, that to $2 million is $750,000 to $2 million is worrisome. It really is, with insurance
for the smaller and mid-size fleets, right? For the owner operators,
I think for the entire industry too. It's a little bit. It's just going to add on a little bit more of operating expense, and the insurance market for those people, or those smaller fleets who have to go out and buy insurance. They're not self-insured, right?
Yeah,
it's tough already to define policies.
It really is, and it'd be interesting to hear some comments from some people on this, because So you're increasing the insurance limits because it doesn't adequately, what do the proponents say? It doesn't adequately compensate victims of accidents involving large trucks. So, I mean, is this an attempt to help Band-Aid a little bit the bleeding from nuclear type verdicts and that type of thing?
I think so. I think the inflation, I mean, we talk about nuclear verdicts a lot of times, but just the general inflation of the costs associated with health and car crashes, and just the normal, not punitive damages so much, but the actual damages have inflated a little bit. And it's something that we looked at around the first part of this year in the Freight Intel group. We did a paper on nuclear verdicts, which Andrew had a large part in it, so I wanted to get his opinion on his thoughts on this too.
Yeah, and it seems to me that this would be make it a little bit. It's pretty easy to get into trucking, right? It's a pretty
low barriers of entry.
Low barriers of entry. This kind of puts up a little higher of a barrier, right? So there would be interest from those in the industry, certain areas in the industry, trucking industry, that would be proponents for this to put up that little bit more of a barrier, right?
It is, yeah, it is. What are your thoughts on this, Andrew?
Yeah, Kevin, I echo your sentiment. I think this really puts a lot of pressure on the smaller guys that are already reeling, that are already having a tough time. This is a very tight margin industry. Everybody knows that. Insurance costs have been rising gradually and steadily for the last 5 years. Again, during that nuclear verdicts paper, we saw that, the aim of this bill, the aim of this amendment is not really going after the nuclear verdicts. I think they're actually taking the wrong reform. I think states should look more to like what Louisiana is attempting to do with tort reform, rather than trying to increase the insurance premium. I think this is going to force a lot of people out of the market, and it's going to hurt a lot of the small owner-operators.
I agree with you. And we have Adriano Galvo Silva. Good morning. And he's with Impacto Transporte. And then Amanda Miller is a freak out over the proposed insurance requirements premature, and that's a really good question. There's going to be a lot of horse trading on amendments.
I wouldn't freak out just yet, but you need to keep your eye on it and be concerned about it and be prepared for it passing, because it hasn't yet. And there's going to be, like you said, there's going to be horse trading going on. But
yeah, but I guess if you're looking at it as betting odds, the betting odds just went up.
Yeah, they went up.
It came out of the committee. Did. And then Timothy Mohawk, replying back to Amanda, it could be, however, planning for the worst case should be done just in case profits are tight as they are. This would be a heck of a lot tighter, and I think we all three echo Timothy's comments there. And then Austin M., absolutely ridiculous to raise it. And Don Kreisman, yeah, we can afford this with these rates, and parentheses sarcasm. So a very sarcastic statement there. Paul Johnson, do the insurance rates have already put us out of business as of the end of the month? Cannot get cheap insurance or fair insurance without paying an arm and a leg. So
yeah, there's some real concern out there, man.
There's real concern.
Yeah, Eric Serta, this will be pushed by the companies with money. That's what I was kind of alluding to. There's going to be there's parts of the industry that would push for this, because it creates a barrier to entry, and potentially, as you're seeing in the comments here, it reduces capacity.
We know that this is a hot button issue because the comments are flooding in right now.
It's a hot button issue. There's no doubt about
Mike
it.
Di Donato, Evans Network, he's an agent. I can't see this passing the House and Senate, and I kind of agree with that. It's going to be a long slog through all of that.
Well, and that's why you're saying what the version that's there before them right now is not going to be what it looks like when it does pass. Something will pass, but it not in its form that it is right now.
Yeah, it's an amendment to something that will pass.
Yes.
The Invest in America Act will pass, but it's going to be one of those. Those sausage factory bills that is going to get really messy in there. Thomas Smiley, this is crazy. Small carriers will go out of business at an even faster clip. And, yeah. So what's our next headline there, Andrew?
Yeah, Kevin, the next one is about Nikola. We've been talking a lot about them for the last few weeks. They've been in the headlines. The latest headline comes from a little bit of a Twitter battle between CEO Trevor Milton and a Bloomberg reporter that did an interview with him, and that article was released earlier this week, excuse me. So this latest incident, again, boiled over last night when Milton accused Bloomberg business reporter on Twitter of lying about details of the Nikola 1 Class 8 truck. He then posted a letter signed by the Nikola chief legal officer threatening to sue the reporter Ed Ludlow for libel for the story published under the headline, "Nikola founder exaggerated the capability of his debut truck." Ludlow wrote that Milton suggested that the prototype was drivable, which is a claim that Milton denies. The letter to Bloomberg is quite vague, honestly. It kind of has some big legal threats without actually making any point to make any specifics of what was wrong or what was lying about in the article. So he left it kind of open. It seems to be a big threat to Bloomberg, but we'll see how this plays out over the next couple days.
Yeah, I really don't know.
Well, you know,
I read the article, you know, and went through it, and I read a lot of the comments on Twitter that came back, and people giving advice this way or that way or whatever it happens to be. When I read the article, you know, they're talking about his comments at an event from 2016 or something like that.
I think so.
Is what it was. And when I read those comments, it really sounded like Trevor was up there very proud to have this thing out there and made some rather jovial comments about why there were chains around it, because I don't want anybody driving this off the stage, right? That type of thing, which this guy seems to be twisting into him saying that. So I don't know.
You kind of find that from time to time. Is he taking a page out of Elon Musk and creating conflict for marketing and branding purposes, maybe? And the cease and desist letter, or the letter that he sent, you know, you find that in a lot of cease and desist, right? A lot of empty threats and kind of vague language, and it's not really enforceable. Oftentimes, but it's something that you can publish out. What are your thoughts on this, Andrew?
My thoughts is that Nikola's pre-profit and pre-revenue. I think he needs to kind of stop fighting these battles. He's got a great product that's going to be that he's prototyped and that's going to be released. Nikola's stock is not being hurt by this. The stock's even up over the last 2 days. I think he should probably just let it go and focus on making great products.
Agree with that completely, Andrew. And the other part of it is, you know, his projections of when the infrastructure will be in place for the fuel cells and when he'll deliver trucks and so on are fairly conservative and not hard dates with really large stretch goals like another company we know, right?
Yeah, I'd agree. They don't set the goals similar to Tesla. They've taken a much more reasonable approach, let's call it, to their goals. I think they're 3 or 4 years out before their first deliveries. They're not even going to begin production until 2021. So again, there's a lot going on. They're constantly in the headlines. A company that's pre-profit and pre-revenue that has shot up 600% in the first 6 weeks. They're going to have some targets on their back. They're going to keep coming. This is not the last attack that's going to be on Nikola. He just needs to make sure he keeps focused and get towards the end goal.
Very interesting. I mean, there's a topic for you for Put That Coffee Down. Turning negative press into positive.
No, that's really good.
Because you're right, that battle, if you sustain that battle a little bit and people go, oh, Nikola, what's going on there? And then they research and they find out actually what's going on, and there's some really good positive things in there. You can turn it the right way.
They say that there's no bad press. I don't know if I 100% agree with that, but it's a philosophy, but it's mostly true. The comments are still flooding in on the insurance limits, and we have Les Willis. Nuclear verdicts, no way. This is just another way for attorneys to reach a settlement without courtroom appearance, and that's raising the limit. And then William Cockerham, President and CEO at William Cockerham Transportation, I believe. I'm curious what the ATA's position is on raising the minimum limit. I know most of the Association for Small Mid-Sized Fleets will be against this, and they are. The power of the lobbyists and their money will have a lot of say in whether this stays in the bill or gets axed. And I completely agree with that. And whether it's the ATA or not, I think the insurance lobby is very much for this.
Yeah,
for this
absolutely.
Bill. And,
absolutely.
And we know that they probably, we know that the insurance lobby has more money than any trucking lobbies combined.
Yeah.
So that's going to be, and
no doubt about it. And Les Willis has a comment in here, which I saw a couple of times on the Twitter feed, too, from Trevor Milton, where he asks, little tongue-in-cheek, wonder how much Elon paid Bloomberg for this article, right?
Yeah, true. Yeah, exactly right. And then Mark Hedges, a freight agent. If this were to pass, all it would do is put small carriers out of business, raise the rates on shippers, which in turn will make your milk at the grocery store cost $6 a gallon now. Not to mention all the other groceries, and he kind of puts it on the ATA. To push out their competition. So I think a lot of the small fleets are reading that way. Whether that is or not is to be seen. Andrew, do we have another headline?
Yeah, Kevin, the last one I got for you is the top from the FMCSA. The top officials of the administration are confident that the hours of service final rule will go into place on September 29th as it was planned. Joe DiLorenzo, the director of the FMCSA's Office of Compliance and Enforcement, said Wednesday that his agency is not anticipating any delay in implementation when asked if the rule could be held up. However, Democrats in the House of Representatives have included a provision in their version of the highway bill that would delay the HOS rule rules by up to 18 months until an extensive safety review is conducted. This is despite the authority of the Secretary of Transportation to issue regulations according to the bill's language.
Yeah, I think there's some groups that are going to try to fight this. They've already, set legal proceedings up. A lot of safety organizations. So they might be able to hold it up. The FMCSA is still out there saying they're anticipating no delays. What do you think the odds are on that?
Low. There'll be delays.
I think so too.
There's always delays.
I agree with that.
We'll be talking about this for a while. I mean, you read through the different provisions that are in there, and some of them they just seem like common sense.
I know, right? There's nothing outrageous in these. I mean, we're sitting here looking at these right now, and I've looked at them for months, and nothing really jumps out. It just seems like pretty common sense.
They look like common sense that kind of ease some of the burdens that are on the drivers and make it a little bit easier for them to make a little bit of some money and drive and utilize the not these strict constrictive rules, but there's some flexibility in there to where common sense can take over, and you can take a break through using this or the sleeper berth rule. Now you can split 8-2 or 7-3, that type of stuff. It totally makes sense.
It does, but I know that there'll be groups out there fighting that, so we'll keep everyone abreast of that situation here at FreightWaves.com. Thank you again, Andrew, for those headlines. And next up, we have Zach Strickland talking about the freight markets, supply and demand. What do we have today, Zach?
Yeah, thank you, Kevin. So, volumes continue to be elevated, certainly month over month. We appear to have settled into a seasonal pattern, according to our outbound tender volume index. Of course, still roughly about 8% year over year increase, which is really significant. Again, 2019, not a strong year. We've talked about last week about the disconnect between, capacity, tightness and these volumes, as you traditionally see more around the lines of a 14% tender rejection rate, when you see this level of volume. But it does appear to finally be setting in with some of the market, where tender rejection rates are now up over 7% for the first time since, of course, the big heated March / April cool down. So, things do appear to be coming together in terms of seasonality. We're seeing some tightness as we approach the 4th of July. Is it as tight as it could be? I don't think so. But I still think we have a few more weeks to go in terms of seeing the peak tightness right now.
So, Zach, looking at this, we've discussed this before, is, the reason why the rejections or the capacity has remained loose, and we're seeing it starting to come up, and there's kind of is capacity leaving the market? I think there is some capacity that's leaving the market and failing. We've seen those in loan numbers, et cetera, that we've talked about with John Kingston before. But is it also are things kind of normalizing? We had this really fragmented type of movement of freight, and things are starting to normal, and those larger carriers, et cetera, are starting to get back into somewhat of a normal schedule, and therefore these one-offs are being rejected type of thing?
I think it's just now setting in. Like carriers, of course, as we approach July the 4th, people start to take more vacations. They had April off. Freight patterns are starting to show some semblance of normalcy. I don't know if I would call it normal to the extent that it would have been prior to COVID. But I do think that we're seeing, like you said, some more regular freight patterns exist. We've seen some long-haul freight here in May, take place. Now these drivers and these carriers have been on the road for a while. That memory of April is a little bit less prevalent in their minds as they get more of these volumes. I think they're just, we're starting to see some elevation on the spot market. Some of those rates get a little bit more appealing, especially if you're trying to make up for lost ground in April and May. It's the time of year where, carriers have that mentality that, hey, we've got to take advantage and make some money when we can. Maybe we take that extra spot load or that higher paying load a little bit more as they kind of inch forward out of the trough.
Gotcha. That makes sense. So something we're going to dig into a little bit deeper with Kyle Lintner from K-Ratio later today. But quickly, we have a couple minutes. We were talking earlier about the volumes and what we're seeing there. And over the past about week or so, the real uptick has been in the what we classify as medium and short haul. The local has been flat, and long haul and tweener have been flat, but it's medium and short haul that really has been driving this latest. We've seen a bump over the last few days again, but we've been seeing them kind of support this for the last, 5-6 days?
Yeah, and I think that's, we're starting to see some similar patterns of 2019 rear their heads again. We saw this last year. Of course, the first 6 months of last year, this was very prevalent. We saw, this huge pull forward from the trade war. People were cramming warehouses full of freight, and then they were repositioning that freight. They would come into the ports, sit in a warehouse for a while, and then go, to a secondary warehouse as they tried to cram as much inventory into spots as possible in front of demand. A lot of things that are, shippers have difficulty sometimes forecasting demand, and now that service has become an increasing factor, especially when you're talking about supply chain rearrangement, shortages of, capacity coming across the water. Airline capacity obviously diminished significantly, so they cannot count on all that freight being available. It's just like, what if they canceled your Amazon Prime, out of nowhere, and you can't get the service that you've become accustomed to? You start buying things in front of where you anticipate your need is. And I think that's what we're seeing a lot of right now as shippers are starting to position their freight into areas and move into other warehouses as warehouses fill up.
Zach, you're talking about the changing markets, and especially between the spot market and the contract market. I've been hearing a lot lately in the last couple of weeks about mini bids. Shippers going out to mini bids, kind of as an extension of going out to spot, or maybe it's kind of like going out to spots, doing mini bids with the contract carriers. What are you hearing about that market?
Yeah, anecdotally, we're hearing a lot of this mini bid situation, or we used to call it rollouts. They're traditionally outside of the normal realm of the normal scope of their business, where they're saying, okay, for this period of time, we're going to roll out this product, and they segment the product out with it. So it's not necessarily the entire book of business. But I think it's a good way to manage, this uncertain time where you have, you're not sure when demand's going to pick up, how much of that demand is going to, shorten your inventory levels. Also, that's going to protect you from this, capacity fluctuation as well. So you can lock in, and the carriers as well can lock in with the shipper, knowing that they have a guaranteed amount of freight coming through the pipeline here in the next 3 months, which is far easier to forecast than a 12-month cycle, which is the traditional bid. But yeah, we are seeing a lot more of that, and I think that's a wise decision on both parts, just because nobody really knows what these things are going to look like here in the next 3 months. Is there a second outbreak, et cetera? So you might as well go ahead and take advantage of the current conditions, get your rates locked in for about 2 to 3 months, have these little special projects, and it's definitely a way to also, lump off this volatility for the future.
Yeah, it makes sense, and it makes sense even if there's the recovery in Q3, Q4 really starts to take hold and blow up, because you lock in too low of rates, and you've got dangers of waterfall effect in your routing guide, et cetera, and you've got carriers that are locked into low rates, and then they're fishing the spot market and cause a whole nother mess. So the three-month thing seems to make sense.
Yeah, I think obviously the shippers, if they do lock in too low of a rate, they put themselves at great risk here in the next 6 months, especially if we see demand come back with any significance in the third and fourth quarter.
Thank you very much, Zach. You guys did Freightonomics yesterday at 2 p.m. You can get that on tv.freightwaves.com or Freightcast on the audio version. What did you guys talk about?
Yeah, we talked about the spot market and contract market, who was really driving those rates here in the last little bit. We hear a ton of, anecdotal talk about how brokers are driving rates down, et cetera. So we broke down, who really drives these rates up and down. I mean, and the bottom line is the carriers are the ones that control a lot of that, motion of rates. We talked about the relationship between spot and contract to an extent, as well as, of course, as usual, our economic update where we had a lot of surprising data about retail sales and some industrial production and how they were interacting.
Great, fantastic. I know we had a conversation before you taped, and it was fascinating. I can't wait to watch it. So we'll go with that. This is Zach Strickland, our Director of Freight Market Intelligence here at FreightWaves. We also have some comments from the hours of service that we need to get to. Ant Cobb, defund the FMCSA, defund the ATA. He's very passionate, all caps, with that. And then to fund any and all ELD companies. So we know where Ant Cobb stands on
Ant
this.
Cobb just made someone's list somewhere.
He did, yes. Then Mike Donato, delays with big government agencies. I'm shocked.
Yeah,
I'm shocked that there's gambling going on in here.
Yeah,
yes.
That was when you asked me, do I think there's going to be delays? I was, yeah.
I know. And then Paul Johnson, he's a safety director. How many safety checks should they have to look at to decide on hours of service? Have only done these and charged us American people with our tax money to do that, and now they want to do it all over again. I thought the CSA was the check to all this, and that's what they did. And now they want to do it all over again before they change the hours of service. So I think he's expecting delays as well.
Yeah, of course. You got to spend money. Number one rule of government: spend money. And
I know.
The other thing is bring in a consultant so you can blame someone when you're wrong.
I know, right? So Michael Vincent, it is Thursday.
It is Thursday.
You know what Thursday always is, especially here at the midday market update with Anthony Smith, our lead economist. It's initial jobless claims. What do we have today?
That's right, Kevin. Thursday, so it's time to go over the initial jobless claims. And what we have is another 1.5 million Americans that have applied for jobless claims over the last week. This is a slight decline of just a few 100,000. So the expectations for this week were somewhere around the 1.3 million mark, but we just see a drop of a few thousand, kind of showing that stubborn, slow decline for initial claims. On the continuing claims front, we see that dropped also, so that's a good sign, but this is also another one that's falling very stubbornly slow here. The continuing claims are now at 20.5 million, so this is a drop of roughly 60,000 or so from the last week's reported number. Overall, when we're looking at total initial jobless claims since the beginning of the pandemic, we're sitting right around that 46 million individual mark of initial jobless claims since the beginning of the pandemic. So we are still seeing that downward movement, that decline, but that drop last week, much lower than expected.
So, Anthony, people who are paying attention to jobless claims and the initial jobless claims and the continuing jobless claims really for the first time as they're watching this recovery, right? Some people may, they're casual fans, but then when March Madness starts, then everybody's a Duke fan. What 1.5 million in initial claims? What's a good number?
So this is completely unprecedented. We're looking at numbers in the millions. So if we saw something in the 1 point something millions in February, this would have made headlines. So typically we see these in the hundreds of thousands. And so that's kind of where we were floating around before all of this, in the low hundreds of thousands. And see the spikes up into the millions. At one point, I think it reached well over 3 to 6 million in 1 week. So this is really, really still drastically high from historical trends. So if we had a reading of 1.5 million, that would have broken records, bad records historically, if that would have happened in February. So this is still very, very far off. Although there is a decline, it's a little bit frustrating to see that 1.5 back-to-back months, back-to-back weeks, and so it's kind of showing some slowing down here. So hopefully we can continue this downward movement on a week-to-week basis. One of the things that did happen in this latest week was that there were applications that were submitted on June 13th under a temporary federal relief program in place when the pandemic began. So that could have kind of inflated this week's numbers a little bit, but still, nonetheless, 1.5 million after seeing 1.5 million last week, a little bit discouraging, although it is downward moving, still in the right direction.
So we have jobless claims to judge the health of the economy, and then we also had a retail sales report that has very large percentage gains in that compared to the previous month, but that's sequentially or month over month and not year over year. Can you explain that to our audience, just how to read that retail report that came out this week?
Definitely, and I think this is going to go with all macroeconomic releases. When we looked at April numbers, I think the expectations for many analysts, economists, or observers of the macroeconomy, I think expectations were April is going to be the worst month. When we look back at April, the economy pretty much shut down throughout the entire month, unstopped. As of March, it was half a month. April, the full month. May, we begin to see some states reopen. So April numbers are awful and atrocious. So when we're looking at May in comparison, they were going to see quite a bit of month-to-month change. And so, for example, we're seeing retail sales are now up 17.7%. So this is a drastic jump up compared to April numbers. But this is, again, this is 6.1% below the year-ago levels. So is it a movement in the right direction? Yes, of course, but you have to keep in mind where is it coming from on a month-to-month basis. So when you're looking at these headlines of either retail sales, housing starts, or industrial production, the thing to keep in mind is what's this month being compared to? If it's being compared to one of the worst months on history, then you got to take that with a little bit of a grain of salt and maybe start looking at some of that year-over-year comparisons to kind of really track where we are in a normalization or a recovery.
Yeah, very good.
Yeah, no, really interesting information. We're kind of treading water, hopefully before another peak. Thank you very much, Anthony, for those comments today. And
yeah, excellent. Thank you very much, Anthony. You're looking at it and just given that context of, things are up and things are up, right? Let's not lose sight of where they're at. Yeah, they're up off of absolute disaster.
That they are.
Right. Industrial production up 1.4%, but it's 15% down year over year.
Yeah.
That's atrocious. But
it is atrocious.
We've got Bob Poulos on the line now. So welcome, Bob.
Poulos joining us via Skype here.
How are you, my friend?
Right. I'm well. How are you, gentlemen?
Doing well. So Bob Poulos, CEO of V3 Transportation, which is primarily expedited, correct?
Correct. Yes, we're an expedited motor carrier and broker.
Yeah, excellent. So last time you were on, Bob, and it was a while ago, you were talking about pivoting a little bit for the industry that you were serving, right? More towards a lot of PPE type of stuff, right?
Yeah, so our last conversation was at kind of the beginning of the COVID crisis, and we saw demand for expedited capacity just instantaneously dry up. I mean, it just happened very quickly. So we did pivot, and we did quickly move into some other commodities such as PPE. And surprisingly navigated through the recession or the pandemic quite well. We are not yet back to pre-COVID levels, but as we've talked about before, in the expedited world, we're kind of the leading indicator. We believe in transportation, at least domestically. And we are definitely seeing a gradual uptick in business. Every day, it seems like we're seeing volume increase. So, very, very positive outlook in the near term.
What industries are you seeing the largest or the most significant pickup in expedited freight?
So pre-COVID, we were about 50%, 50% automotive. So, we see the automotive business pick up sharply. It's interesting. I just had this conversation this morning with one of our larger customers, and when the domestic car plants shut down, they shut down very abruptly, and the supply base did not necessarily shut down in cadence with the OE. So parts were being manufactured and shipped and stored. So when the plants came back online, what was it, 3 weeks ago or so?
Yeah, that's about right.
They started producing with one shift, and most have increased to two. But it took a while to kind of blow through that inventory. But that seemingly has happened, and the manufacturers are scrambling to build parts inventory. So our automotive business has seen a very sharp increase, and it's interesting the markets where we're seeing it. So the Laredo corridor, and I'm sure you see it in your own analytics, but northbound out of Laredo and out of Southern California, which is not traditionally an automotive hub, is just sky high. It's we in our unplanned world of capacity, for us to have pre-planned loads before an inbound truck lands is kind of unheard of. That's what's happening right now in certain markets.
So it sounds like you're talking about they kind of had to go through this inventory, right? And it was a little bit slower because you had a kind of a stutter start kind of thing.
That's a good way to describe it.
Aligning it with Mexico, and also the eating up of inventory, correct?
Correct. Yeah, absolutely.
So now you're seeing it fairly steady and uptick on a daily basis right now. You see this being sustained? Are you seeing indications that this would sustain itself, or you think it's a buildup of anticipation of demand, or what do you see?
For the near term, we think it'll be sustained. So our experience last Wednesday was our highest volume day of the COVID era. Okay. Followed by Thursday was the next busiest day, followed by Friday. So we had a 3-day trend, which carried into Monday. Tuesday, we can't really explain. Demand went down, and today and Wednesday and Thursday today are very strong. So near term, we think that our trajectory, we will see consistent increase. Not to mention on the carrier and on the supply side, there was pretty significant carrier failure and capacity exit. So we're looking at supply and demand balances, and that also obviously drives our industry. So we're seeing increases from there.
On the carriers leaving the market, is that strictly in the expedited space you're speaking about, or is that across the board?
I'm speaking specifically in the expedited area.
Okay, so the expedited area is seeing a significant amount of carriers exit the market. Do you think those carriers or that capacity will re-enter the market anytime soon, or is that going to be with a lag?
I think there's going to be a lag to it. That capacity, since we're typically an owner-operator, contractor-driven industry segment, that capacity does find its way back in, but there will certainly be a lag.
How about any other industries besides auto that you're seeing a significant uptick in volumes, or you're anticipating very soon coming back online, especially non-retail, non-essential goods markets?
Sure. So we look at our manufactured, non-automotive manufactured customers. So our ag customers, our construction customers, we're seeing nice demand pickup from those segments. We service the chemical industry, so our chemical customers have also picked up. Now, some of that chemical business is tied to automotive, but most isn't. So we're seeing increased demand for within that sector. The only sector that is really lagging, and it's one of our smallest verticals, is the retail segment. And that still remains pretty sluggish, and I guess we can explain that just with what's going on in the economy.
It's interesting to me that chemicals are starting to pick up, right?
Yeah.
I mean, that's a pretty leading indicator for manufacturing, isn't it?
Absolutely. Yeah, there's no question.
I mean, like you said, it's automotive, but that's all industry, right? Chemicals, movement of those chemicals, and that's almost like... It's almost likened to out-of-the-ground minerals, right? I mean, they're processed, but it's
still raw materials.
It's a raw material for industry. So to see that's picking up to a significant degree would be good news, I would think, for predicting industry, right?
We're encouraged, absolutely, and we look at it every day. Absolutely, Mike, you are 100% on.
Very good. Yeah. Thank you so much, Bob Poulos. How do people learn more about V3 Transportation, what you're doing there?
Oh, yeah. So our website, certainly, www.v3transportation.com, or I'll shamelessly give out our 800 number, 888-255-5955.
Very nice. Thank you so much, Bob. You have a great day, my friend. Good luck to you.
Thanks, guys. Anytime. Take care.
Thank you.
Yeah, it's interesting. He's seeing retail sluggish and chemicals picking up.
It is. I mean, industrial production numbers.
I mean, everybody's got their own verticals and their own mix of freight, right? So, I mean, it's the particular customers that he's seeing. But that's the first I've heard of, like, chemicals up.
Yeah, and expedited is a leading indicator of trucking, especially once you go to a standstill.
Yeah. Oh, yeah.
And then you're ramping up.
Things
have to be expedited before they return to normal.
Yeah.
Expedited to maybe truckload, to maybe intermodal.
Yeah.
Pickup. But
yeah.
That chain has to the steps follow one another.
Right, and I'll tell you anecdotally, he's 40 to 50% of his business is automotive. So yesterday I took my truck in for service, so I walk around, I look at what's there. There's nothing on a lot.
Yeah.
Talking to one of the sales guys there last month was record month in sales. They can't keep up with the demand. They got nothing on a lot.
That's surprising, but
yeah, I was a little surprised.
I've been hearing those same numbers, but it's surprising to me. But I'm probably an outlier when it comes to buying cars. We have our next guest here with us now, Brad Rollo, CEO of Go4 Industries. How are we doing today, Brad?
I'm great, guys. How are you?
Good.
Doing awesome. Welcome, Brad. Thanks for joining us.
Yeah.
Oh, thanks for having me. Quite an honor.
Very good.
For us, you mean, right?
I'm sure if you want to look at it
that way. So Brad, you guys Go4 just raised a round of funding. Can you explain that as well as what Go4 is all about and what you guys do?
Yeah, let's hear a little background about Go4. What you guys, what vertical you in? It's kind of unique. It's a niche for sure, right?
Yeah, so we're basically a marketplace for logistics, right? We focus on the construction industry. We're leveraging the gig economy to put these asset classes out there for our customers to use, right? So we're not a fixed asset carrier, right? And we're technology driven. What we've done is we found an industry, like our niche is on the construction side, where, is when something doesn't get to a job site, there's actually two people who are losing money on that, right? It's the supplier, because that customer is not happy, and it's the contractor. So we facilitate the movement of goods in a quick and efficient manner.
So you are asset light. You do have some assets, but your asset light, I think, is the way it's described. You described it, right?
Well, maybe I should rephrase that. We don't own any assets. We don't lease. We don't rent anything. We work with owner-operators and fleet operators, right? So contracted. So unlike some of our competitors, we're not purely owner-operator. Like, we have to have guaranteed service levels, right? So we'll work with small courier companies, fleet operators in each city that we're launched.
Gotcha. So you've got some dedicated contracted fleets in some locations, but you are as asset light as you can get. None.
Exactly.
Yeah, cool.
So is this a final? Would you characterize it as final mile for building and construction? So if you buy construction materials at your local supplier through, it would be an e-commerce platform, and then you take care of that final mile distribution to the job site or a construction site?
Yeah, we're definitely the last mile delivery. How you work with us is different, right? So it doesn't necessarily have to be through e-commerce, although it can be. Contractors are creatures of habit, and they all like to order their own ways, right? That can come from a phone call into your wood guy. A lot of times it can be a scribbling on a 2x4 and a picture and text it in, right? So you work with your retailer. We don't interfere in that relationship. We just provide that quick urgent delivery for you.
And that's something that the contractor actually hires you for, and not the supplier, right? Your customer base.
Actually,
go ahead.
Sorry. Yeah, no, it works both ways. So sometimes the contractor may send us to a supplier that doesn't use our services, and therefore can dispatch it. It could be also to their tool crib or their depot to get materials or tools. But what we've penetrated the market is not to focus purely on the contractor side. It's actually go to the retail side. Right, the retailers have the problem. Usually, at the end of the day, the deliveries get pushed off to them, and if they don't meet that delivery in that time frame that contractor wants, then that business will go somewhere else. And so we found a real gap there in that service, and penetrated the market that way, gained our traction.
That's interesting, Bob, because I was looking at this, and when I was reading through it kind of came to me that there was like this growth in demand due to the current the pandemic and the lockdown and so on and so forth, and it seemed to me like, okay, so there is this, but once people start getting out, whether it's in a month or 2 months or 3 months, that demand would soften. But the way you explain it right there's just been this gap there. I used to work in a business that did final mile logistics for a big box store, doing installation of appliances, etc. So you're filling that gap that just wasn't there in a sense for the construction and building materials, correct?
Yeah, there was definitely gaps, especially, for sure. Like every retailer typically has their own fleets, right? Those fleets will do, say they have 4 trucks do 40 deliveries a day. Everything over that 40 is probably lost revenue because that contractor can't wait the next day, right? That truck breaks, that employee doesn't show up, right? Or you need a 3-hour urgent delivery. And we fill those gaps, and that's where we've done very well. Pandemic has been very interesting because it's shifted our business a lot, right? We went in very much the B2B guys, right? Solving that that pro problem. And, suddenly, big construction projects continued, right? The condos, those high rise, and we still saw a lot of work there. But the home renovation, right? Everybody was in lockdown. Nobody was letting a contractor in to work on the kitchen or the bathroom, right? So that really slowed down. What we've seen is that the demand that increased to support our growth over this time was actually on the consumer side. Right, so we work with some big box retailers where we're integrated into their e-commerce to provide this same day 3-hour delivery. We saw that volume increase, insanely, right? And so now we suddenly got have a large chunk that was B2B is now B2C. The B2B part is coming back as we all come out of lockdown, but we never expected to be dragged so much into the B2C deliveries as well.
Yeah, so I imagine the efficiency and the convenience of that service, the B2C, that you saw this dramatic spike. Is the idea that you maintain that level of service and that expectation and that 2 to 3 hour window, that a lot of that will stick through this, right? And people will just get used to this type of service because it's much more easy to have this just delivered to you via your services than to go borrow a pickup truck from somebody or rent a trailer or rent the big box stores' little trucks that they have sitting out there that you can rent by the hour.
Yeah, absolutely. June with our big box partners, June tends to be the slowing down of their spring season, right? Mm-hmm. We've seen that demand stay very, very high. People now have this delivery first mentality, right? It's forcing, an industry that lagged behind to really adopt new levels of customer service and technology. So I think the best point is Amazon. Amazon hired 175,000 drivers to meet the pandemic demands, and has kept 70% of that staff. That's where you can expect things to go.
Yeah, that's what I was getting at. Excellent. Thank you.
Yeah, and it looks like you're in 60 cities right now in the U.S. and Canada. Any plans or timeline for expansion?
Yeah, so we obviously slowed down expansion due to the pandemic. Now coming out with this raise to support that, we're hoping to launch probably in the next 6 months, say 15 to 18 cities, all in the U.S.
Excellent.
Very good stuff, Bob. Thank you so much. It was interesting when I saw that article. I was like, really, e-commerce construction building? But digging into it, this makes total sense. Best of luck, Bob. So where do people get get more information about Go4 and get in touch with you guys?
Yeah, our website is go4delivers with an s.com, and you can always email us at info@go4delivers.com.
Excellent. Thank you so much, Bob. Have a great day, my friend.
Take care.
Thank you very much.
Very interesting stuff. I mean, that's what I was getting at when I first read this, and you and I kind of discussed this beforehand, or maybe it was with Zach Strickland. But it's like, okay, so doesn't this go away when everybody comes out of lockdown? But it makes perfect sense that even that if the convenience factor is there and it works, why wouldn't you just keep doing it, right?
There's no reason not to, and certainly it really makes sense that you have that overflow or those expedited 2 or 3 hour deliveries, and certainly if you're a smaller contractor, maybe a smaller customer of a retail, a big box retailer, you're not going to get the attention, or you might be put down last on the list. And with this service, it's basically working the overflow. Or those types of deliveries that don't fit within or suppliers without a fleet,
suppliers without a fleet, or consumers, and
consumers,
and like we talked about as well. You show up in the morning. If you go in the morning to one of these big, like a Home Depot and you buying some lumber or something like that at the contractor desk, forget about it.
Oh, I know.
There's 20 guys lined up there at 6 o'clock in the morning, ready to go, right? So they wouldn't even have to do this type of stuff, right?
Yeah,
I mean, they could do like I did when I built swing hinge in my backyard. Is I ordered the wood at night. The next morning, it was delivered, and I got to go to work. Right? If that works, I see it.
It'd probably make my dad really happy because he's got like 15 trailers, little, that he has, and everyone's always trying to borrow it to go. So if you can just get it delivered, he won't get his trailers back with nicks and scrapes or whatever little detail is out of place on it that he gets perturbed about. But
exactly.
So I think it's time for some good news today. Michael Vincent, right?
We've actually heard some pretty good news throughout the thing. But let's get into the good news section here. So a truck driver honored for saving a pregnant woman from a burning car, right? And you can find us on FreightWaves.com. So Nick Austin writes about this. So from the umbrella of Nick Austin, the Truckload Carrier Association has named Harvell Keith Martin from Tallapoosa, Georgia, a highway angel for rushing to save a woman trapped in her burning car. On a cold, rainy day in December 2019, Martin was driving his truck on Interstate 40 near Hickory, North Carolina. His 18-year-old son, John, was along for the ride, who he describes as he's with him a lot. He wants to become a driver, which is kind of cool. So as they pulled out of a rest area, they waited for a car to pass, right? And then a short while later, they watched the same vehicle lose control on the slick road and drive off into a ravine. So they pulled over as quickly as they could. They get out, and they saw what looked like smoke or steam coming out of this car. So he grabbed a fire extinguisher, so did a second trucker to come over as the car burst into flames to douse the flames. They couldn't do it. And they saw this woman, late 20s, pregnant, stuck in the car, leg pinned, couldn't get, panicking, couldn't get out of the belt buckle. So he got in there, cut her out, got out of the car, and sustained burns on his arm and the back of his head. So kudos to him, man.
Yeah, I mean
a highway angel for his willingness to help the crash victim. TCA President Martin presented him with a certificate, patch, lapel pin, and truck decals. JLE Industries also received a certified acknowledgement of the company driver as a highway angel as he drives for JLE Industries. So good news, and way to go, Martin.
That is. So that's great news. Good Samaritan, a real hero out there on the road. So it's always good to have those feel-good stories, and people are helping and we've seen that all through the coronavirus pandemic. People are there to help others out.
Keep it going, guys. We don't need a crisis to be excellent to each other.
You do not. You do not at all.
So today on Freight Forecasting, we're going to talk about what's coming up. So today on Freight Forecasting, I'll have Kyle Lintner, Principal and Managing Director or Managing Partner at K-Ratio on, along with Zach Strickland, our Director of Freight Market Intelligence. We'll be talking about the volumes that we're seeing right now, lengths of haul, imports, the latest economic numbers, and really kind of what's going on there, and is this sustainable? I know it's a question that's on everybody's mind, but as we get more economic data and more information from other companies in different verticals, it's becoming a little bit clearer of a picture of what's going on and how long this wave is going to go. So we're going to be talking to that today.
That'd be great. Freight Forecasting is always entertaining and it's educational. If you sit and spend 30 minutes a week with Michael Vincent and his guests, you will learn how to forecast freight, how to be a freight forecaster. That's really the only education you need. Listening to Michael Vincent,
all you need in life is freight forecasting. 4 p.m. at Eastern Time on Thursdays.
Yeah, and then at noon tomorrow
FreightWaves
Eastern
TV.
Time. Yeah, FreightWaves TV. Noon tomorrow. What the Truck
we
is
have what
up
the truck.
with yourself
That's right.
and Dooner.
Yeah, I was talking to Dooner about that, and I said, so we got mac and cheese, ketchup, and something. So what we have at Robert O'Dwyer from Kronos to talk about contract tracing. In the logistics industry, Dylan Williams from the Walmart team at the Kraft Heinz Company is going to play it forward a little bit. He's gonna bring some music to us there, and as is Randy Hudson, the freight broker coach. He's going to bring his axe and do a little bit of stuff there, but it's going to be great. And also, do drones have wings?
I don't think so.
They absolutely
some
do. They absolutely do. And Rhett Ross, CEO at Deuce Drones, is going to talk and tell you all about the wings that drones actually do have. It's going to be a killer episode, man. Don't miss it. Noon tomorrow.
So when you say wings, is that like aerodynamic?
You're going to have to tune in. Hey, I'm not giving it away, bro. Drones have wings.
Okay. I'm sure some do. Yesterday at noon, and you can find all these shows on FreightWaves TV, tv.freightwaves.com, Apple TV, Amazon Fire, Roku, wherever you can download apps for streaming. So at 12 p.m. Yesterday, we put that coffee down. Dooner and I, our Freight Sales podcast, we talked with Tyler Hildebrand from RTS.
Yeah, you got a lot of positive response.
A lot of positive, yes. I mean, so Tyler has a background in art and film, and he became a freight broker, and that's how he prospects. He sends out little, 90-second to 2-minute videos telling a story, all edited together, to get attention and a response from prospects, and he's landed a lot of big accounts within a year. His first year of being a freight broker, getting in on bids by using what he has deep experience in to standing, to making a great first impression instead of a cold call and becoming memorable. So it's a fascinating.
You were talking about these subjects before the show, and I mentioned to you I had a story from back in my roadways days, right? And I mean, you didn't have social media and that type of stuff back then. So I mean, to get noticed, I would ride along with the driver, and then when we pull into the yard of a company, I'd get in the trailer. And when they opened the door, I'd be standing there, and I did that until I got the outbound business from several different places when I was there. I would do anything that I possibly could. I couldn't do films or anything like that. I mean, it was the 80s, man.
Hopefully you didn't give anyone a heart attack whenever they opened up the door and saw you standing there.
Standing there, right?
Yeah.
But hey, if you miss any of these things, right, where do they go? So you need to go and you need to go to tv.freightwaves.com and subscribe today. And you can find when you do, you get all the backlog or the archive of all these great shows, and go back, and even our events like FreightWaves Live at Home, and find some of those excellent things. I had some people hit me up on LinkedIn looking for specific demos from there yesterday, and I said, hey, go to FreightWavesTV.com.
With 27 hours of content, all sliced up into 20-minute, 30-minute talks, keynotes, market talk, Waves talks, just all kinds of great content on the app. So yeah, go download that, and we'll see you back Tuesday for the next midday market update.
You definitely will.
Yes, at 12 p.m. Eastern Standard Time.
Right on. Peace and love, everyone. Take care.